Hello, everyone. Welcome to today's session. Let's get underway here with today's updates. We've got market conditions that are continually kind of pausing right here. We had S&P 500 that made a breakout move a couple of days ago and really just kind of settling in right here. Buy-sell ratio, we had ticked back to negative. We're sitting at still at 0.86. And now things have kind of been curling back together again after the rally that we had the other day. But overall, just kind of a flat consolidative type market right here with this slight uptrend. And we'll see if we start to see any additional weakness here. But this is a significant breakout on S&P 500, or it's getting very close to it. Short-term breakout, which was up above this most recent range of 478, somewhere in that neighborhood. And so, but we're in this upper extreme range now. So we could certainly use a day or two or three of consolidation. And ideally that happens. And if we do retrace, we get support now at this 179 location. And that is kind of what we're looking at right here, kind of a quiet day in the market as a whole. If we take a look at sectors, we're not seeing a whole lot of, that was the commodities. Let's look at commodities while we're here. Oil has been working on trying to reverse this downtrend, a little bit of an upside right here and some support around that $68 range. And it needs to hold up around that $68 range for it to maintain this attempt at a new uptrend. You can see we've gone back to green and it's kind of been, churning support area around that 65 range. And but there's some resistance coming in at that $70 range. You can see this area here now is creating that overhead ceiling and some resistance on price activity there for US. So let me jump over to sectors here now and we'll see really on nothing's obviously going to change since this morning's update if you were able to view that. But we are seeing a few more of these sectors that have gone either back from hold back to buy or from sell back to hold. And so we are seeing a little, constructive bullishness where we're seeing more and more of these sectors that were moving over to hold and into a sell range. And now we're seeing a few more move back, hovering in that range. Healthcare was one that had dipped back down and starting to find some additional support right here. So things are still looking, quite bullish overall, just working through a retracement of this overall uptrend, and that takes some time. We're at new highs or all-time highs. So we're going to start to see some profit taking. We're going to start to see some, some of that FOMO of people that feel like they've missed out on this rally jumping in versus are we at the end of the rally? We are seeing one of the discussion points also to keep an eye on is bonds right here. As bonds had this big run up with equities, now it's retraced, sitting right around this $92 range. It needs to continue to find some support right here. And it needs to start moving back up because remember, as bonds are moving down, interest rates are moving up. And that's not what we want to see in the market right now. We want to see interest rates at least holding steady. And bonds starting to find some support. This is actually a really bullish pattern here. If this can hold, where you have this support side of the downtrend, and now you have this support side of a potential uptrend, that could start to continue to hold that support around 92 and get more upside. Markets may also like that and get an additional boost here if we can see interest rates start to tick back up a little bit here as well. The overall, one of the things that I noticed here this morning on the index scan is the buy-sell ratio on some of these indices to see which ones are leading, which ones are kind of lagging. We obviously know that technology is leading, 4.4. Even if we go back to sectors and look to see what's the leading ranked ETF here is technology. So technology is leading the path here. If we take a look at some of these stocks that are in that group, NVIDIA is the biggest leader, solid breakout. And once you get that breakout, really had a lot of pent up momentum from this entire move, and it's now in that upper extreme range. But we're seeing that across the board, and really these are the heavy hitters right here. These are the big players. These are going to be ultimately the biggest winners in AI and everything that's involved in AI. This is the who's who of who's going to be profiting, at least in terms of being able to utilize that. Apple should be in there as well, but the stock got clobbered and has lost some of that momentum. Applied Material, with chips and Lam Research, Broadcom, Nvidia, those are all producers, and then we're seeing some healthcare, pharmaceutical, and lots of things happening here in technology, which has been quite impressive over this last, really since October. And if we take a look here at Dow stocks, so Dow Jones Industrial stocks, of these 14 stocks, let's take a look and see which ones are leading here. So the highest ranked stocks in the Dow: Microsoft, General Electric, Travelers, which is an insurance company, IBM, Visa, Walmart. Interesting, General Electric has really had just a really fantastic run here from some of the lows, and even some of the lows of years and years ago, to continue this overall uptrend. I haven't done much homework on what it is that they're doing that's working, but there's such a conglomerate that they have lots of places to go to, lots of areas, lots of sectors that they have their hands in. Let's see, S&P 100 is kind of flat right here, and probably the bulk of these stocks are going to be similar to NASDAQ stocks. I don't know why it pulls this one in. That's not a part of it. That's an ETF. Eli Lilly, General Electric. Eli Lilly was one that was in there that was interesting. That's got a breakout retest here as well. What I'm looking at is just this price pattern when it comes up to that range, and then retests it, breaks out, and then finds some support. That's a bullish pattern here, and you're seeing some of these bottoming tail bars happening on that. Let's look at the 1 year time frame and see. Eli Lilly, it's a nice looking pattern. Some of the muscle stock groups, we're continuing to see strength here in anything to do with bio and pharma and biotech. Seeing lots of action here in those stocks. Home builders are also moving, and tech. So this muscle stocks group, we're just getting a kind of a good combination, a good spattering of really what's working in the market right now, and that is healthcare and anything to do with pharmaceutical or biotech or biopharmaceutical. Those are all companies that are developing or working on drugs, or working on some kind of therapeutics. And I think AI is really going to benefit this sector, probably one of the areas the most in terms of research. You get AI and they're working on a lot of the data that they're working with, big data, and there's going to be some really exciting opportunities, I feel like, in that area with drug and healthcare, and our ability to be able to diagnose and research things much faster using all of the data that we have available, and then using AI. One of the advantages of AI is that it oftentimes it can dig out things that we may not be able to even recognize as human beings. Our minds may not be going down a certain path, and AI can just open up another door and be like, okay, I wasn't thinking down that route. And not necessarily it's going to do everything, but it's going to just create some ideas. I don't know if any of you have used ChatGPT yet. I use it quite often, and it's actually quite fascinating as an idea generator. And I think that AI is going to really benefit that in that area as well. That's just my own opinion, and kind of seeing how it's evolving just in this last year with ChatGPT and what companies are doing with that model and that idea, and how it's creating efficiencies, or just flat out replacing humans in some cases. There's going to be lots of collateral damage, and what are some of the opportunities of the efficiencies that it's going to be creating? I think healthcare is going to be one of them. Really not a lot to go over today in terms of what we're looking at. This is just this S&P 500 price pattern. We've got this this buy sell ratio, which is really the buy sell ratio, and then also on the directional alerts, we do have momentum at the extreme range. We've got the breadth, which has been working its way back up, and we've got sentiment also extreme. So there's no question we're at the upper end of this trend, and this, you know, we want to continue to trade that direction as momentum traders. That's what we're focused on, is continuing to just trade what's working, continuing to trade in the direction that's working. But at some point, the market as a whole can be extreme. And because we do focus on stock picking more than kind of market direction, then we can still go in and we can still be watching for new buys, even in a market that may be topping or weakening, or at the upper end of the momentum. There's going to continue to be opportunities. But there's no fear yet. We haven't seen a real capitulation move lower. And that also is an indication that the market is buying on the dips right here. We're still seeing buying opportunities on anything that is pulling back. And sentiment is this upper extreme though here. We haven't seen that for a little while. This is actually one thing I wanted to see spike. And so now we're seeing that in that upper range as well. Price did push pretty aggressively to that upside with S&P 500, Dow, NASDAQ. Everything is moving higher. This could go even higher as well, but we're at the range where we're going to start to see some slowing and maybe even start to see some reversal. So depending on your strategy, you know, you're depending on your allocation and how you're invested in equities, this is going to be an area where if you're looking to start to reduce exposure to equities, now's a good time to consider that. And all that means is how big of a position. If you're trading actively, that means how big of positions am I taking on in new stocks, or am I not taking anything new at all right now? Am I not trading anything new, or am I going to continue to just keep the allocation I have? If I'm looking at things like, you know, 401k money, where you've essentially got, you know, stocks, bonds, and cash are essentially the choices, then that rotation over to something a little bit more cash at this point, because equities are topped out. These are the times to start to adjust that balance and start to consider the rotation. And remember, one of the biggest factors in allocation is risk and the ability to deal with volatility or potential losses. There's nothing wrong with volatility unless you need that money that is volatile for your income right now. So, you know, if you're invested heavily in equities and you're seeing, ouch, my account is up or down by X amount of thousands of dollars, and I really can't afford that, then that obviously needs to be a consideration in terms of allocation and adjustment for the shorter term. Being able to handle the volatility, the ups and downs of it that are natural in markets, without that affecting the overall cash position. There's lots and lots of theories and ideas and discussions on that, but you know, just the very basic logic of I need to be able to spend this money. I can't afford to have it volatile, and having some good gains and some good upside, it's a good opportunity to be able to shift. Now, that being said, we should be able to still continue to trade around and do different things as markets are moving up or down as well. The new buy strategy, as we're utilizing that, my experience is when we can still even do well as markets are retracing and moving lower. We just get maybe a few more stop outs or a few more trades that don't quite move as they normally would in a good, strong bull market. We still are in a good, strong bull market. We haven't shifted and reversed. Like, for example, what I'm referring to is something more like this price pattern on S&P 500 right here. So during this phase, this retracement period, we continued to buy into that, and some of those new buys, as they were moving higher, they were stopped out, but we did have a handful that we got into that really rocketed early on. So being able to continue to go through that. So same story right here is being able to just continue to go. Let's continue to trust that direction until it stops working and we have a significant reversal. That's for maybe that little bit shorter term trade strategy. Real long term, well, we don't really do anything super long term here because we're focused on a positions trades mindset, and that is we're looking to buy and sell stocks that have maybe a 2 to 3 month holding time frame, and focusing on good quality stocks that are moving higher in any market condition, and then managing those trades. That's ultimately the overall approach that we're focused on. But that being said, you may have other assets that are in different spots of different accounts. You may not be able to trade them as actively, but you want to be able to maximize the return, but you also want to be able to reduce some of the risk from there as well. And that is, again, that's when you're at the upper end of a market range and everything feels good and equities are continuing to work, but maybe you need to rebalance as well. Rebalancing is a good idea to focus on. Rebalancing is just simply, let's just say that I did have let's say I had a 50-50 allocation split. Okay, and 50% is stocks and 50% is bonds, just as an example. And let's say that your stock portion of that has been doing well. So now your stock portion is now 60% of your total pie, and this is now 40% because the growth of that pie is now out of balance because this piece of that pie has increased faster than this piece. If you want this to be an equilibrium, and some long-term strategies are to rebalance every year, some are a little bit shorter than that, but in this case a rebalance would be you're just simply selling the excess gains out of the equity side and putting that back over here so that it just recreates a new 50-50 split with a higher balance. So now you've just moved this money over to here or over to cash, whatever that is. And that's called rebalancing. In the new buy strategy, we're rebalancing. Let me go to the portfolio because I'm rebalancing at 2.5%. So for example, most of these holdings that are right here are at about 2.5%. As we have winners and they start to increase past that 2.5%, maybe a little bit hard to see right there, but you can see it. That portfolio allocation says 3.8. So we're well above the 2.5% allocation, and ideally, I want to adjust that. Well, our upside strategy is if that goes to 5%, if the 2.5 holding size has now increased to 5%, then we want to reduce that back to 2.5%, which means selling half of the position. So for example, let me go to this stock right now, ARDX. So ARDX has doubled in value, and so this stock I've trimmed back the number of shares from 300 to 150. So essentially I've rebalanced it. I still have the position, but I've rebalanced half of that back over into cash, and then whatever the new buy is for today is going to be utilizing that cash just to reduce the risk a little bit. Now, again, there's lots of different methods on portfolio management and allocation. This is just one of them, but it allows us to be able to just keep rebalancing. And when we have some nice winners like this, letting it continue to run, because these shares that we have now may go up another 100%, who knows, or they may stop out or they may drop. But now we've locked in some of the gains from this position in terms of rebalancing in a portfolio. And that is how I prefer to manage stocks like this, is in a portfolio setting, so that we're not as focused on each specific trade. We're not focused on each stock. It's like, oh, this one's gone up. How much did it go up? Well, should I sell it? Should I stop out? It's too big of a position. Or it just adds way too much emotion, and it adds a lot of risk if that you're only focused on one stock at a time and taking too big of a position size in that one stock. You're just betting too much on that stock. That obviously can work to our advantage if you get a big winner, but in most cases you're going to have some winners, you're going to have some losers. We want the winners to keep running as long as we can, but we also want to be smart and harvest, if you will, harvest some of the gains off of some of those winners, and then putting them back to work with something else that may be earlier in the trend versus later in the trend. If you look at this chart here, ARDX, it's had a massive run up. It could continue to move higher, certainly, but the probabilities of it going, straight up from here after a big move are smaller and smaller. And so we want to be able to capture and harvest some of those gains. And if we get surprised and it goes up another 100%, great. We've still got some shares to be able to participate in that as it's moving higher as well. Let me jump back to this. So when we're looking at stocks and we're focused on portfolio allocation and portfolio management, then it may be a lot. It may be a lot of positions, and you may feel like you've got too many things happening at once. But honestly, it's not a lot. It's not a lot of time. You have a specific scan. You're focused on it. You set your stop loss. You know where part of your target is at least. Now, exiting, we can also adjust stops if we have positions that have not reached this double yet, but are still working an overall uptrend. Then we will adjust the stop working towards that target. For example, this is one of our open holdings, and this is, as it's moving higher, we can now adjust the stop. Our initial entry was back down here, and as it's moving higher, now we can adjust the stop. The initial stop loss would have been down below this low, right? We get a couple moves higher. It's not up 100%. It's up 40 or 50%, but I want to be able to lock in those gains. My preferred methodology is let it retrace once after this initial move. So we get a decent move higher, let it retrace, and then adjust. And then once it confirms that retracement and starts to move back up again, then we get some support, and we adjust the stop. So now we adjust the stop level from here to here. I think I've already done that, but now we've got a new risk location, and now we have profitable trades. In fact, let's jump back and let me see where YRD. See if I can find it here. I'm going to reverse this. YRD 316 on December the 23rd. So 316 on the 23rd. 23rd of December was right here. 2-3. So it was the day after this. So this was the initial entry here. Stop loss, and as it's been moving higher for now the retracement, let me see if I've got that stop updated. I'm pretty sure that I do here. In fact, here's just had a brain fart there for a minute. Okay, let's see here. Oh yeah, hello. Okay, YRD, sorry. YRD right back here, stop loss 350 on that. So we do have a stop set at 350. It's got a good confirmation move today at the end of the day. So I like to make all the adjustments at the end of the day. So first thing in the morning is typically when I'll make any decisions, because now I've got a good idea of where everything's closed, what I'm dealing with, where the stop loss needs to look, how kind of adjustments we need to make. Now, there's a reason for that, and the reason for that is it slows down our emotion. Okay? If we wait until the end of the close to make any decisions, and then we make all our decisions in the morning before the market opens, it reduces. We're making our decisions based on a process, and then because of sitting here and watching the screen. There may be times where we get prematurely stopped out because it's like, oh my gosh, this thing is dropping, and I just need to bail out of it. Or man, look at the gain on this thing. We've got enough of a gain. I'm just going to sell it. Okay, so we let too much emotion start to creep in. So if we do the two things where we're focused on a portfolio perspective, number one, so this becomes my process that I'm focused on, not just that one stock and that 100% gain, because what'll end up happening is you'll start to get used to some of these type of gains, versus right now, if you don't make a lot of trades, or you have a winner or you have a loser, then it's like, oh my gosh, what should I do now? Doesn't have to be a lot of money. You could have one share on every single one of these and just trade the process small so that you're learning the process. And then as you get more and more comfortable, do 2 shares, or then do 5 shares, or then do 10 shares. Ideally, you're doing that 2.5%, or you say, I have $100,000 of an account size, or 50,000 or 30,000 or whatever the number is, but I'm only going to allocate 10,000 towards this methodology, which means I'm going to trade $250 per trade instead of, if that's 10,000 instead of 2,500 on 100,000, I'm going to trade $250. Okay, don't think in terms of I need it all and I need it all now. So many brokerage accounts are now they're so competitive that the commissions are next to nothing, if not nothing. The transactions are very easy. The tools are easy to entry. They're very easy to set stop losses. There's just a huge amount of flexibility for us to buy equities. Okay, I'm only talking about buying stocks and managing this in a position time frame where we're looking at, and most of you that have followed this process have noticed, a lot of times we don't even get past that halfway in cash. So we're usually 50% in cash anyway, which means we could probably take a higher allocation than 2.5%, which we may do. So we can play around with that number if it means I want to take a little bit more risk. Well, in order to take more risk, I don't want to do something that's more risky. I want to stay inside of my system of buying the right stocks at the right time with a certain stop loss, the certain kind of stocks that we're focused on, and a number of those stocks. I just may increase the allocation slightly. Instead of 2.5%, I go 3%. So I'm just putting a little bit more into that trade. That's not overly risky to say, okay, I'm going to trade a bunch of options now, or I want it all fast. I want to double my money fast, so I'm going to trade options exclusively, or whatever the case may be. That's entirely fine if that's the case. But this method is designed for a stock trading only process. You can add options, obviously. It works as well especially with a lot of these stocks that do pop really quickly after a new buy signal. And then they're very strong momentum stocks. Not saying that you can't do that. I'm just saying there's a core strategy, and this way you're able to understand what your strategy is. There's a huge amount of confidence that's created in following a process and having the discipline to stick to your process, versus when you start to feel stressed out or you're not confident. It's because more than likely there's not a system. Or you think there's a system, but there's really not. And that creates frustration. So ideally, number one, creating a system or following a system so you know exactly what you're doing, why you're doing it, where your stop is, where your targets are, or where your adjustments are in terms of allocation, exiting stocks. Okay, for example, ARDX, it's up 100%. I'm going to trim some off of that. That's just a part of the system. So I'm going to do that. I'm not gonna say, oh man, what if this or what if that, or what if it goes up 1,000%, or those are all 20/20 hindsight. Those are easy decisions to make in hindsight. They're harder decisions to make in real time, and so we want to be able to have a little bit more of a methodology to be able to approach that. I'm going to end on that note. That being said, we are running a muscle wheel portfolio. I believe some of you are in it. I recognize some names. If you're not in that, the link on the description or the product page that says Muscle Wheel, I'll add it to the recording of this. Any of the recordings have the product page list entered in already. One of the products in there is called Muscle Wheel, and it essentially is this entire process. So I'm showing you these exact trades every morning, how many shares to buy, where our stop losses are placed, some commentary on the portfolio, just in a lot more depth than we're covering here in terms of generality. So if that's something that's interesting to you, then that is available and rolling right now. We also use a Discord channel. Discord is basically just a community style website where you can log in. It's just a really easy site to be able to use, and a lot of other companies are using Discord. So you may have a Discord channel already set up, and you just have to click a button or two and access our channel, and we've got a lot of users that are really liking that right now. So I'll end on that note. Thanks everyone. I appreciate your time and effort, and we'll see you next time. Bye now.